Welcome to Alpha Insights. I'm Sydney. Thanks for joining us over the long weekend. A quick housekeeping note. U.S. markets are closed today for President's Day, so the last trading session was the close on Friday, February 13th, and markets reopen on Tuesday. If you have questions as we go, remember you can ask us at stockalpha.ai. With me is James, a senior cannabis analyst. James, great to have you.
Thanks, Sydney. Pleasure to be here.
Let's start with the big picture. Over the weekend, policy stories dominated the conversation. A potential federal hemp ban got a lot of pushback, states pushed back in different ways, and cultural pieces kept demand narratives alive. Walk me through why those threads matter to investors.
Sure. The short version is regulation, enforcement, and lab integrity together determine who can sell what, where, and at what cost. A federal action that outright bans hemp-derived THC products would shrink the addressable market quickly. By contrast, a regulatory framework would likely create clearer rules, compliance pathways, and ultimately more legitimacy for products. So investors need to watch which approach wins out, ban versus regulation, because it shapes revenue potential and legal risk.
Over the weekend, an op-ed urged Congress to pause any rush to a ban and instead craft measured rules for THC and CBD. What does that mean in practical terms for companies and consumers?
What that op-ed advocates is basically a slower, science-based route. Practically, that buys time for companies to adapt labeling, testing, and distribution practices rather than face an abrupt market contraction. For consumers, it means product availability might remain intact, while regulators develop safety standards. For investors, that slower route is usually less binary, fewer immediate downside shocks, and more opportunity to identify compliant operators who can benefit when standards settle.
State-level activity was interesting too. Missouri stalled a bill after a Senate filibuster that would have immediately adopted strict federal limits. Why is that a near-term positive?
When state legislatures delay adopting federal-style limits, it keeps products legal in the short term, so companies don't have to scramble to pull items from shelves. It also gives firms more time to run compliance programs and for industry groups to lobby for sensible rules. That said, it produces a patchwork, different states acting at different times, which raises cross-border trade and compliance costs. Investors should watch other state houses because similar fights can create volatility for specific names.
Colorado is proposing tighter testing rules to curb sample fraud. Tougher chain of custody, limits on which samples manufacturers can choose, and steeper penalties. That sounds like a win for quality, but what's the investor angle?
Exactly. Tighter testing raises short-term costs because labs and producers have to change processes, invest in tracking, and accept third-party sampling in many cases. But over time, it erects barriers to bad actors and boosts consumer confidence. That tends to reward companies that already have robust quality controls and transparent reporting. So expect market share to shift toward operators who can prove consistent quality and watch their lab compliance reports and margin trends.
There was also softer cultural coverage, pieces in legacy outlets normalizing THC and talking about wellness. Does that matter for investors, or is it more noise?
Culture isn't a fast-moving financial variable, but it matters for long-term demand. Stories that normalize use, connect products to wellness, or broaden the conversation beyond stigma help adoption. It's not market moving in the short run the way a regulatory decision is, but over the long arc, those narratives support retail demand, new product categories, and higher lifetime customer value. For investors with a multi-year horizon, culture trends are part of the bull thesis.
Let's get actionable. What should listeners be watching this week while markets are closed and before trading resumes on Tuesday?
First, congressional messaging and committee schedules. Any draft language on hemp products is the single biggest macro risk. Second, follow state legislatures to see if others mirror Missouri or rush to adopt federal limits. Third, monitor Colorado's formal rulemaking timetable and penalty guidance for sampling violations. On the company side, keep an eye on the MSOS Cannabis ETF for flows and names like Trulieve, Curaleaf, Green Thumb Industries, and Tilray for sensitivity to regulation and quality control headlines. Operationally, track quarterly results, same-store sales, margins, and lab compliance disclosures. And a practical point, if you hold shares, know your entry points and your stop-loss plan before markets reopen.
Any quick risk checklist investors should run right now?
Yes. Ask whether the company has a clear compliance plan, whether its products rely on hemp-derived THC exposure, how concentrated its state footprint is, and whether recent lab reports show consistent results. Also, stress test positions for a scenario where federal action tightens dramatically versus a scenario where a regulatory framework is adopted.
Great. Let's wrap with 3 key takeaways for listeners.
First, regulatory direction matters most. Watch Congress and state houses closely. Second, Colorado's testing reforms raise near-term costs, but should reward reputable operators long-term. Third, cultural normalization supports demand over time, so don't ignore soft sentiment when you think about multi-year winners.
Perfect. If you have follow-up questions about any of this, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights and reporting, head over to stockalpha.ai. Thanks for joining, James.
Thanks, Sydney. Talk soon.